Although tracking income and expenses and understanding your balance sheet are very important, there's another critical component of effective financial management: cash flow. You've no doubt heard the real estate maxim: there are three important elements in real estate: location, location, location. Well, when it comes to running a small to medium-sized business, the maxim is similar. There are three important elements for the financial management of your business: cash flow, cash flow, cash flow. Many an accountant has shared that advice with many a startup entrepreneur. Cash flow has a huge impact on the day-to-day operations of your design practice. Cash flow management is all about the timing of when revenue comes in and when expense payments are due. The challenge is to thoroughly understand that sequence, plan for its ebb and flow, and have strategies to manage it. Here is an example to illustrate cash flow at a project level. This is a cash flow statement for a project with a budget of $52,500 that lasts for 5 months. The top row shows the cash balance on the first of each month. Cash in is shown on the upper part of the spreadsheet and cash out on the lower part. The bottom row shows the cash balance on the last day of each month. In month 1, the client pays a $7,500 retainer, and there are accounts payable expenses, such as payment for an office lease and payroll of $4,000. So there is a cash balance of $3,500 at the end of the month. That balance carries over to the first of month 2. In month 2, the client pays a deposit toward product purchases of $10,000 and pays $5,000 toward the $20,000 design fee. Cash out is $9,000 toward product purchases, cost of goods sold, and the $4,000 accounts payable expense, so the cash on hand at the end of month 2 has increased. In months 3, 4, and 5, the client continues to make payments towards the design fees and towards product purchases. The designer continues to pay for costs of goods sold and accounts payable. The cash balance increases each month to $10,000 at the end of month 5. If all project expenses have been paid, that last amount represents the designer's profit. In this example, the cash flow is always positive. There is always cash on hand. Getting paid design fees and deposits in advance of the work really helps cash flow. Review this example. When you're finished, click Next to see an example with a cash flow problem. Some people get confused by income expense statements, balance sheets, and cash flow statements. Here's an easy way to keep them straight. An income expense statement answers the question, how did we do? A balance sheet answers the question, where do we stand now? And a cash flow statement answers the question, can we pay the bills that are due?